This is Power Trading Radio Live. Power Trading Radio Live, fueled by Online Trading Academy. For more information on the show, visit us online at powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. Merlin Rothfeld with you for your Thursday afternoon edition, tail end of the week, and another great day out there for your equity market indexes, as we seem to be shrugging off a lot of the issues that are facing our financial markets and just see more buying opportunities. We'll show you those markets here in just a second as I go through our top seven. For those of you who want to know who our guest is today, it's going to be Tim Blotzer. We're going to be talking options strategies. Tim is, I guess, famous for a very short-term strategy with options that he does, but of course he trades many different ways with options. So if you have a specific question you would like us to address on today's show, let us know what it is. Send it on in at powertradingradio.com, or you can join our YouTube channels. We got two of them going on right now, broadcasting under Power Trading Radio's YouTube channel, as well as Online Trading Academy's YouTube channel. And we've got our regulars out there. We've got Dave and Chad and Gayer all waiting anxiously for me to just get on with it and start talking about the market. So if you have questions, join the discussions over there. Say hi to everybody. Be friendly, and hopefully I'll get to all your questions today. All right, TJ, you good? You got me. Bitcoin? Yeah, it wasn't a good day for Bitcoin. Since we started the show yesterday, it's been really in just a slow decline. Of course, you see some big whipsaws that happened this afternoon. But all in all, it's down about 3% on the day, as you can see on the chart here. $7,804 is where we ended up. That's a $241 slide in the last 24 hours, or 3%, which makes it by far the worst performer on the day. Now, if we switch over to Click, we're going to go check out some bond or some Treasury note futures, because that was number 6. The 10-year Treasury note, as you can see, had a small, little tiny green candle. Let's see if I'll have TJ zoom in for you just so you can see it. There you go. There is your small, little green candle here, which means that the yields fell. The yields fell to the tune of 0.85% to the south side, dropping it to 1.858 on the day. Not a major move, but given the lack of movement of other markets out there, it was near the bottom for our top 7. Number 5 brings us to gold. Here is your GC. On the day, gold is down 0.44%. That brings it down about $6.90 per ounce to $1,553. You can see right now we're just maybe a buck lower than that right now. What's interesting about it is, show me the candles there. The question becomes, where do we think this thing's going to retrace to? Normally, we'd expect it to fill this gap, which it did, and has ripped right through it. So the logical target's going to be somewhere further down, getting down to around 1520 maybe, 1518, somewhere in that ballpark before really starting to sprint back up, although it could do it at any moment given a bad announcement with revived conflict. That's what I was looking for. Revived conflict. Because we're at peace now, right? We're all peace and lovey-dovey. All right, that was number 5. Gold down 0.44%. Crude oil is our next one, which really is unchanged on the day. Didn't really show much gain or loss to speak of. And that's coming on the heels of that very large sell-off that we saw yesterday, which, of course, I mentioned kind of came into an area of demand, not the strongest, right? It doesn't mean that this is the launch point for a huge move up to 70 on crude oil. But it is a demand level nonetheless. I guess in hindsight, we'll have to wait and see how this one actually ends up panning out. But as you can see on the screen there, we get the tiny, tiny little red candle, which pretty much closed at the same price yesterday, which makes it unchanged on the day. 59.61 is where we closed at today. That was crude oil, number 4. Number 3 brings us to our bronze metal, which is going to be the Russell 2000. I always say IWM, but it's the RTY futures or the IWM ETF. 1,664 is where we finished at. That's a gain of 0.08%. So for our 3 major indexes that we talk about, it was the weakest by far, especially when you look at the intraday chart, which why not? I'll have TJ just enlighten us with the intraday so you can see what happened with the Russell, because it really wasn't that pretty. Go out a little bit further so we can see the open. All right, where are we? There we go. So you can see it's pretty much down Periscope all day, although you did have some pretty big whipsaws. I kind of do like the whipsaws. Now, when you go over to your number 2 market, that is going to be considerably different because the Russell was only up 0.08%. S&P was up 0.67, completely different picture. You notice that while it did have the whipsaws, it ended up very strong, finishing near the highs. And of course, when we go out and look at that daily chart here for the S&P 500, we have what? I'm sorry, I can't hear it anymore. All-time highs, all-time intraday highs, all-time closing highs, another record for the S&P. So that is your number 2 performer, up 0.67. But it's not the best. The best that we have today is going to be NASDAQ. NASDAQ Composite. It's the numbers I'll quote you. It also is an all-time high, all-time intraday high, blah, 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 blah. The song remains the same. This is why we say buy the pullbacks when something is in this strong of a trend, because the trend is your friend until the bend at the end, and it hasn't quite bent. 9,203 is where we saw the NASDAQ composite finish at. That was a gain of 0.81% on the day. All in all, a very nice one. And you guys can see that the NASDAQ 100 broke 9,000 today, which it has not done before. So there we go. Another record-setting day for our markets. Hallelujah. All right, that will do it for our top 7 markets. Hopefully some of those put some green onto your screen. Now, I mentioned yesterday, well, sometimes I don't have a chance to read all your comments. I know a lot of times I'm trying to look over here to the screen to read those questions as they come through, but I can't get to all of them. So I went back through and picked some that I might be able to get through today. First I want to look at is from Paul. This is on OTA's YouTube page. From yesterday, he said, thoughts on GE long. In full disclosure, I am long GE right now. So I am obviously very biased on this one because I'm holding it long. But this was a long-term play for me. I think that over the long haul, you're going to see GE get its day in the sun again. This is a weekly chart that you're looking at here, and obviously really not a lot to speak of until we get into late 2018, because right around November is the first time it really challenged and broke a recent high. Other than that, it's just been nothing but sell-off since 2017 and even further back than that. But the question remains, is it stabilizing? Is this action that we see here on the right-hand side of your chart, is this GE making higher lows, going to start breaking through and making some higher highs? You know, once we get above 13, I think that's the big tell point. If we can get above 13 and get some traction underneath us, things will start to look a lot better. A lot of it has to do with the fundamentals. When you look at the earnings sheets and the financial statements, expectations are for them to have a really blowout quarter with regards to earnings. They are expected to earn about 18 cents per share. Remember the previous quarter, Q3 of 2019, they were expected to have an 11-cent earnings per share. They came out at 15, so they beat by 4 cents. Right now, there's a lot of raised estimates there for GE. Remember, they shed off a lot of their bad assets, streamlined a lot of their operations. So, you know, this may be that turning point. We'll have to wait and see. Their earnings announcement comes out on the 30th of January. So that's coming up here in a couple weeks. So be careful. I think a lot of the action you're seeing right now is people anticipating those earnings beats. Some of the stats I was looking at said 68% of investors believe that they're going to beat their earnings expectations. I don't know. It's a pretty raised estimate there to be sure. Let's see. Chadbury said, how's my long-term buys and swing or day trades? Should they be kept in a separate account? Also thoughts on E-mini micros for beginner traders. I think that E-mini micros, the micros are a fantastic product for those of you who start out. It's so much better to start off with a very small account and something that if you are wrong, it's not going to destroy you. That's why I love those micros, because you can just get in there with a very small amount of capital and practice. Because, you know, in theory, it's the same product. So if you can trade a micro, then you can get up to the minis and then you'll be doing a bit differently. But bottom line is, I think they're a great product for you to start out with. When we start, most people focus on how much money they can make. Obviously, if you're trading one micro contract, you're not going to get rich. This is not a way to make a ton of money. It's a way to learn how to trade, get that process down, apply what you learn in our classes, Online Trading Academy if you're a student, and then you build from there. So I think they're a fantastic product. Where should you house your accounts? That's totally up to you. I don't like to mix my accounts. So for example, if I have a couple day trading accounts where those are specifically going to be short-term stuff. I have longer-term accounts. Obviously I have my IRAs and things like that. But I'm making sure that in those accounts I have a specific objective for that account. Why is that important? For me, I ran the risk of mixing assets, and all of a sudden I'd be in one trade, which I thought would be a long-term trade, and then I might close that out, or I might not be able to trade it. Here's an example. Let's say, for example, I was long 100 shares of Microsoft, and I thought, I'm holding this one for the next 6 months. I think it's going to be great. And I've got that 100 shares of Microsoft in my account, but I look at the chart and I go, you know what, man, boy, it's coming in a really strong supply level right now. I'm going to short Microsoft. I couldn't do that in an account. It's called a boxed account. You can't go long and short in the same account. So I split those accounts for that specific reason, where I would be able to, you know, in my long-term account, still be long a security. I felt good over the long term, but in the short term, I could day trade it and maybe go against my original position. So I think you should have them in separate accounts. I think that you should never have an account over $250,000. I just think that's a risk. Personally, for me, over $125,000, I will split those accounts into separate brokerage firms and spread it around, because I don't trust the banks. I don't trust financial institutions. I don't trust FDIC. As they said when I was teaching in college, non mi fido di nessuno. I don't trust anybody. All right, so hopefully that helped you out there, Chad. Let me see if I got anything quick coming on from the Power Trading Radio YouTube channel. There we go. All right, Let's do this. Let's take a quick break. We come back. I do have Tim Blotzer on the phone. We're going to be talking about options. He's got, I sent over a couple questions from Marianne and Will, which came in last night, so I'll get those questions answered. If you have some, feel free to send them on in at powertradingradio.com, and hopefully I'll get them all answered with Tim Blotzer right after a short break.
It's just very gratifying, and the benefits of traveling and getting to share my knowledge and really seeing a student, on Saturday morning, a little trepidation, a little nervousness, and then by Thursday and Friday, they're just following the process, clicking buttons, trading, first at Sim, then live, and it's just tremendously gratifying. So I'm looking forward to the next 10 years.
Trading can be a lonely career, right? Especially if you're just sitting in your basement by yourself, typing away on a keyboard. So I needed an outlet, and I'm able to come and connect and share what I've really enjoyed, and it's helped me. And so there's part of that's the giving back, and I really enjoy that. And if I can make a difference in somebody's life, that's a pretty awesome thing.
Seeing students start out, well, I'm not sure, I'm not quite sure, I'm nervous, and to be able to give them the confidence throughout the week where they feel that they finally can do what they want to do, and that they know that I'm there, that Online Trading Academy is there for them to hold their hand, help them out anytime they want to be. To me, that's the best possible thing you can do.
For me, I wanted a way to be able to give back. Naturally, I've learned something at such a young age that this is a skill that I can use for my entire life. So being able to give back to other students who are going through that same journey, that's something that to me means a lot, and that it's a pleasure to be able to do every day.
Welcome back to Power Trading Radio Live and your host, Merlin Rothfeld, with today's special guest.
Hello, everybody. Welcome back to Power Trading Radio. It is your Thursday edition. We've got a great gentleman joining us today who's an options expert, been trading options for quite some time. Been on the program many times over the past few years, but you know what? I like to check in with him probably once a month. We've got Tim Blotzer joining us today. Tim, how you doing?
I'm doing great, Merlin. How are you?
Wonderful. Where are you at today?
I'm at home.
Oh.
In Sparks, Nevada.
I always want to say Reno, but Sparks, yes.
Next door.
Just next door, right to the street. Did you have yourself a good New Year's?
Yes. Yeah.
Okay.
Nice and quiet. My dad always taught me New Year's Eve was amateur night.
Really? Okay. I kind of like New Year's Eve. It's one of those days, it's a celebratory thing. So many people are into like Christmas and Thanksgiving and all this. For me, New Year's is like, okay, I can now put a bookend on 2019. What happened, whether it was good or bad or indifferent. I can learn from it and move forward. So to me, I think it's a good thing. It's just that record-keeping moment, and especially for people who are like accountants. You've got that one data entry where it all starts fresh from there. To me, that's New Year's. So, and mine was.
Well, that's because you're still young.
Yeah, judging by how I feel after my
settle down
softball game last night, really not buying that whole young thing.
Well, they say 60 is the new 40. Well, I say 9 p.m. is the new midnight.
Yeah, so the ball drops in New York, and that's it for you.
Well, that's one place I haven't been yet, so
okay.
Still on the list.
All right. I wouldn't recommend going for the ball dropping in New York. It's not that big of a deal. Let me go into some listener questions here. We've got some interesting conversations going. People think cryptocurrency, Bitcoin stinks out there. But, yeah, you know what? Teach their own. We'll see what happens. 10 years, I think, will be the test. There certainly will be other cryptocurrencies that will probably be better than Bitcoin, but we'll have to wait and see. Let's see. We'll start with this question from Marianne. Marianne says, I trade SPX options with Thinkorswim, but starting from this year. There is extra charge, index options fee, each day. It is a little burden to me. Is there any way to trade with minimum cost or to avoid this fee? So I guess what we're talking about is if someone's an SPX trader, what's the best thing they can do to watch their costs?
Well, the thing is Thinkorswim is one of the brokers that used to absorb those fees for trading the SPX, so now they've decided to pass them on. But it's not really that much a fee. From what I've seen, it turns out to be less than $2 a contract. Now, I'm sending an email to one of my friends that works over there to find out what's up. But other people have asked and found out that no, the fee can't be waived. It's just part of it, but it's a minimal part, and I think it's probably a reflection of them going to zero commissions on trades, but there's still commissions on the option contracts.
Right.
I think it's 65 cents over there. But the main thing is just make your trades and put the odds in the favor as best as you can for yourself, and manage your risk.
Right.
One contract on the SPX, I can make, probably $40 to $50. If it costs me $2 on top of the 65 cents, I'm okay with that.
Is there
I don't like it.
Yeah, no, of course you don't like it, but there's ways around it. For example,
Trade the SPY.
well, that's one way. But years ago when I was in the equity world, we could shop around and we could obviously find better commission rates. And while I know a lot of people really hold in high regard Thinkorswim's options platform, the platform in other areas may fall a bit short. As someone who spends most of their time in the options space, do you shop around? Because I know that Thinkorswim might have the most functionality. Well, that is until Click we implement our functionality, then we'll probably be better than Thinkorswim.
Yeah.
But are there other brokerage firms where you look at it and you go, okay, well, they're charging me 65 cents plus $2 at Thinkorswim, but I can get them for 50 cents over here and no extra added fee, and therefore do more trading over there? Do you shop around like that?
Well, it just seems now, ever since they've gone on to the zero commission kick, they're looking for other ways to collect any money they can. Now, like I said, Thinkorswim always used to pass us on. TradeStation didn't. Other brokers pass it on. Other brokers haven't passed it on. And it just depends. There may be somebody out there, but, you got to look at the overall picture. And, what I used to always use was Barron's every year comes out and ranks all the brokers of all the good and the bad. And so you've got to look at what's the overall picture. Do you get good execution? Do you get support? Can you get out of a trade early? And that's what I hear a lot of, feedback. I put in my stop, but I'm not getting out. You got to look at the overall picture, and for less than $2 a contract, I'll live with it.
Yeah. All right. And you're right. I think it does come down to what the features and functionality that you need. For example, there was I'm not going to mention the platform. I can't want to say them on air. But there was a platform that I used for many, many, many years, which I basically just had the minimum amount in there. I did the minimum amount of trades to get the software for free, because to me the software was hands down the best out there. But the commissions I had to pay was higher than anything else. So I was actually using that platform for the analysis tools, for the charting, for all that, for my strategies I was practicing at the time and doing backtesting stuff. And I would do all my execution on the cheap no-frills broker. Well, nowadays, with the equities and ETFs pretty much for free, with no commissions now on a lot of these major brokerage firms, we have that luxury. I have a feeling at some point you may start to see these brokerage firms now step it up and go, okay, well, we're going to do options for no fee either, but that's probably coming down the road.
And it's, just like anything else, everything's negotiable. And I think, if you've got a lot of assets to bring to a brokerage, they're very willing to work with you to do that. Now, I want to do more research on it, because this did just start the first of the year. So I've sent an email off to a friend that works at TD Ameritrade to find out if there is other things you can do. But I don't think they're going to pass that on, or they're not going to absorb it these days.
Not yet, right? They have to take their first lumps first and see how they can get keep their business afloat with the no commissions. I mean, that certainly was a shock to me. It's funny. I did not see that coming. I thought it was going to be this continual cut. Maybe we get down to $1 or $2. So hats off to Robinhood for kind of setting that ball in motion. Of course, it's interesting also that as that happened, you haven't really heard so much from Robinhood anymore. I think that their IPO may get scrapped and that company might just dissolve. I know a lot of millennials use it, but why not use a platform that gives you all kinds of robust functionality for the same price?
Yeah, and that's one of the things that I heard why the zero commissions came out, is because of Robinhood coming out with the IPO.
Right.
It was kind of to set them off track.
I tell you, if you're the two founders or the founders of that one, you're going, oh, come on, we were so close. The finish line was right there. We almost got our payday. And the big boys went, Not today. Not today.
Missed it by that much.
So close.
And, you know, when they came out with the zero commission things, I heard an interview with Charles Schwab, and he was talking about, look, our focus now is assets under management.
Yep.
That's it. And, you know, he said, I think the commissions were 4% of their income. So they'd rather have the assets under management.
Right.
But they also want to manage your money for you. Nobody watches your money more than you, except maybe your spouse and your kids.
No, that's just, you keep watching your money more than anybody else.
And that's what we're all about.
Right.
Is teach you how to manage your own money.
Of course, you got to. Let's go to a. This one's from Will, and it's Will says, which is more expensive, buying puts that expire in 1 year or shorting a stock and paying the margin interest, assuming it's not on the hard to. I'm assuming HTB is hard to borrow list because a lot of times HTB.
Yes.
Hard to borrow and does not have a dividend. So I'll try to break it down. Is it more expensive to buy the puts that expire in a year or go short a stock and pay whatever margin interest it is? And if they are paying a dividend, you would have to come up with that as well.
Well, you know, what it all comes down to really is what's my goal here? What am I trying to accomplish? You know, our rules are if you're going to buy something, buy it out in 90 days or more, obviously, but the only time I've really gone out more than that is when I'm buying something and I'll go out and buy a Leaps that's 2 years out to do that as a stock replacement. But in this market, I'm not going that far out. I don't like to do that. And, you know, what are you doing? Is it because you're making a play that on news or, you know, it's who had earnings yesterday, Bed Bath & Beyond. Oh, are they going out of business now? Should I short those, buy a long-term put? You know, all those things you got to evaluate, and it all comes down to what's my goal? Right. What am I trying to get out of this trade? Why am I getting in? When am I getting out? What is my trading rules, and how does that apply? I never shorted a stock. Haven't traded a stock since 2004. I'd rather do options. So, you know, everything's a trade-off between risk and reward.
Right. Yep, it always is. Unfortunately, we have to figure out exactly how those risk and reward profiles pay out for us. And you guys hear me say it all the time on this show, which is that, you know, most of the people who start off, we see it when people come and take classes initially, they're wide-eyed with ambition about how much money they're going to make. And if you don't understand the risk side of it, you end up usually generally losing. To Will's question, which is more expensive? Look,
beats me.
Well, I know.
Look at everything individually.
That's not a beats you. This is an easy one because you look at the cost to short 100 shares of a stock. I guess depends on this ticker symbol. But you know, shorting 100 shares of Apple is way more expensive by shorting the stock versus going and buying some puts on Apple. So.
Oh yeah, absolutely.
From a pure cost basis, it's a no-brainer, no questions asked. You would go with the options side of things for the cost and the leverage that you get. Now, some people might not qualify for options accounts. You know, you have to have some experience out there. And I think most that get evolved in the markets look at it and go, I'd rather not shell out the tens and maybe hundreds of thousands of dollars for me to buy the physical equity when I can just send out a portion of that and control that with the options and not be on the hook for many of the dividends and other pieces that are coming out. So it's kind of a tricky question because from just a simple numbers perspective, yes, it's more expensive. That was your initial question, which is more expensive.
Yep,
it's more expensive by the underlier, but there's variables out there which certainly add to your risk. But that's we could dive much deeper if you needed to, Will, but that's what we got for now. All right, let's take a quick break. When we come back, we will go, I'll scroll through here and find some listener questions out there. If you have some, feel free to send them on in. I have Tim Blotzer joining us for one more segment. So if you'd like to know more about options, a specific setup, a specific market, let me know. Send them on in at powertradingradio.com or send them on in on our YouTube channels. We'll hopefully get to all those questions right after a short break.
Learning this way is fine when the stakes are low. But when the stakes are high, you need to rely on skill, not just knowledge. At Online Trading Academy, you build your skill one step at a time. We teach our students to trade and invest with a strategy, not a hunch. You learn our methodology, then practice it. You get to make mistakes and ask questions, and watch instructors make live trades. Develop your skill the right way. Click here to get started with Online Trading Academy.
Meet Mac. As a trader, he liked the signals that came from technical analysis tools, but they didn't help him find the best trades consistently, so he searched for a new approach. Mac attended Online Trading Academy's free class and discovered their core strategy, a trading methodology that spots when big banks are likely buying and selling, so everyday investors can too. Mac carved out a path to trade and invest with confidence, and so can you.
You've been listening to Power Trading Radio, live, fueled by Online Trading Academy. To learn more, visit us online at powertradingradio.com.
Hello, everybody. Welcome back to Power Trading Radio. It is your Thursday edition. Before we get to our guest, I want to address a listener question. There's a lot of talk in the chat about cryptocurrencies, and we generally people fall into one of two camps. They either get it, they understand it, they go, "Wow, this has tremendous potential," or they go, "I don't have a freaking clue. This stuff is stupid to me. Doesn't make any sense." And part of what we do as an educational organization is to bridge that gap, not to make the person who says, "I hate it and I think it's garbage." I'm not trying to convert that person to make them say this is the greatest thing ever. And vice versa, I'm not trying to take the fanboy out there and say that it's garbage. But understanding what it is that we don't understand helps us formulate an opinion. So I saw a couple of you guys saying, "Hey, I don't understand squat about cryptocurrencies. It seems stupid to me." TJ, bring up this screen over here. I would encourage you to go to otacademy.com. You can see it up on your screen right now. If you click under library, you will see a bunch of free courses. And we have classes, or not classes, but educational material on college funding, credit management, estate planning. You see the third one there is cryptocurrencies. If you click on that one, I built these out. And I spent a ton of time researching for my own personal interest and also from an educational perspective, the cryptocurrency space. You'll see there's it starts off fairly basic with the history of money, because I think you have to understand how money works to understand why cryptocurrencies have evolved and become a necessity. But I believe there's like 17 or 18 different videos that will help you understand much better what this whole hoopla is about. So before you start going, "Oh, they suck, they're garbage, I think that it's a passing fad," just watch those videos. They're free. It's not going to hurt you, but it'll at least give you some food for thought and a bit of education as to what these cryptocurrencies mean for us in the financial markets. So hopefully you guys will check that out. All right, Tim, I've got viewers out there asking for something from you. They feel like they know you well enough that you owe them. They're asking, "Where's your joke?" Gizmo says, "Come on, Tim, how about a joke?"
Okay, well, why was no card playing allowed on Noah's Ark? Because Noah was standing on the deck.
Oh, I thought you were going to say something because no one could ever beat a pair. Oh, huh?
Pair, yeah.
There was no three of a kind? I mean, where's the full house? Boy, I could take that joke and run with it.
And how does Moses make his coffee? Not Steve Moses, but the Moses.
The Moses, I don't know.
The Moses. He brews it.
Oh, boy. Seriously.
Well,
oh, jeez.
I go back to my old favorite. Termite walks into a bar, says, "Is a bartender here?" Is the bartender.
Oh, boy. See how quickly our shows digress. You asked for it, Gizmo. This is what you get.
They asked for it, not me.
Let's see.
But you know what? Speaking of the cryptocurrencies, it's very similar, I think, to what options is all about. Because what do you hear all the time? Stay away from options. They're too risky. Those options expire. Oh, there's too many moving parts. And it is. It's just like anything else. If it's something that you want to do your research, do your homework, find out all the ins and outs and how's it work. And you know what? Once you learn it, it's a whole different world.
Right. Yeah, I know. Obviously, when we look at it from a risk perspective, obviously there's a significant amount of risks. I would say more in the crypto space than you have with options, because you have a market that's been tested and developed, and it's got regulatory agencies, et cetera. So obviously the crypto space is a bit more dangerous out there. But for those that don't know, I can bring up platforms right now that are no different looking than Thinkorswim or TradeStation. They're identical. You can even actually trade cryptos on TradeStation, and these markets are very liquid depending on which broker or which asset you use. To me, it's really no different than trading stock, for example, because I could pick a stock that is super liquid, say SPY, an ETF, right? Super liquid, no problem getting in or anything. But I could trade something else that's extremely illiquid, like SRS Laboratories or some little penny stock that has no volume. This is the same in the crypto space. You have some that you probably won't want to touch, and the spreads are huge. You have others that are very liquid because they're the most active, and even each exchange may have different liquidity factors for those specific cryptocurrencies. Because remember, one of the major things about cryptos you have to understand is that they are not centralized. They are decentralized exchanges. So each exchange has its own population of volume. And one exchange might be very active in Bitcoin. The one right next to it might have zero volume in Bitcoin. All depends on that exchange. All right. We don't want to torture them any longer. So, Tim, when I know you do a lot with SPX. Do you look at longer-term plays and kind of make, like some underliers? Like I had a question about Deutsche Bank here. I got a question about GE. Do you ever do like when you look at something that might be bottoming out and may have a potential for long-term, instead of buying that one, do you look at it and say, hey, you know what, I might go buy some leaps on this or buy some longer-term options?
Not anymore in this market.
Okay.
And when I started in 2004 to 2007, we were just going up nice and easy. We didn't have these wild and crazy swings, and we're so moved by the news these days. Yeah. And the last week is a perfect example of what happened with Iran, and what's going to happen in the markets all over the place. And then the market just kind of really discounted it. And what I like about doing options, and mainly I'm doing shorter term these days, is because I don't have to be right. If I'm trading directionally, I have to be right. There's opportunities out there all the time, but the problem is you've got to get focused and get good at something first.
Right.
Whatever it is, get good at it before, don't try and do 10 things at once. Get good at one thing. And, I love to buy calls. I love to go long term. Just not in this market, because we're too screwy. And, I don't even like to hold overnight.
Yeah. Okay.
Because, we're getting these gaps at the open, and then we end up going higher. We gap down, and then we go higher for the day.
Right.
And it's just, I look at it as, where can I make money? I'm looking for conservative, consistent returns. And maybe it's from my baseball days. I'm just looking for base hits.
I'm right there with you. One of our viewers, a Mandalorian, by the way, named Boba Fett in our audience. Thanks, Mandalorian, for Boba Fett, for joining us on Power Trading Radio. He says, what SPX weekly strategies have been working in this environment? Because we have had a lot of crazy whipsaws. We've had markets in the pre-market have been down huge, and all of a sudden rip back up and are up, 1.5% of the day. It's been a crazy roller coaster ride out there. Are there any SPX strategies that you find to be working better than others?
Oh, yeah. And the SPX and the SPY are the only instruments out there that have Monday, Wednesday, Friday expirations. Now, the NASDAQ added a Wednesday, but from the last time I checked, there was not enough liquidity, not enough premium in it. But the SPX with expirations on Monday, Wednesday, Friday, I get in Monday for Monday, Wednesday for Wednesday, and Friday for Friday. And somebody said, well, you're a day trader. I said, well, I never considered myself a day trader, because I figure if I set up the trade correctly and I'm looking for a high probability trade, I'm not, I'm looking right at the sign on top of my computer. Don't be greedy. Don't be stupid. Follow the rules. Because, these days, because the VIX has been so low, there's not much premium out there. So I don't expect to get much premium. And if I can get 30 cents in premium, and if I can do that on both sides, do a bear call and a bull put, turning it into, what I call a rubber ducky, otherwise known as an iron condor, is I'd rather get 30 cents 3 times a week.
Right.
Than 50 cents 30 days out.
Oh, makes sense. I mean, it's the lot of littles. It's what I call the Walmart theory. They don't make a ton of money per product, but they're making it all the time on a ton of products. So there's a lot of little theory.
And that's what my mother taught me when I was young. Fast nickels instead of slow dimes.
Yeah. Hey, and I like it. It's a nice approach. It just. I want to just make sure the viewers understand that it's taken you a long time to develop that and get there and refine that process. So don't think it's going to be this thing where you just jump in right away and all of a sudden you're pinning the ears back on the markets. It takes time. You have to understand not only how these markets work, but the strategies, and also understand yourself. Real quick, let me get this one from Will. He says, question for Tim. Which of the Greeks do you use most often, and how does it help you?
Delta, because Delta is kind of the indicator. Delta is a multitasker. It's dollar for dollar. For a dollar movement in the stock times your delta tells you what your option price should be. It's the equivalent of owning shares of stock. I also look at it as the probability of being out of the money. If I've got, say, a 15 delta, that means I have about an 85% probability that option will be out of the money at expiration. And so that's probably the one I look at the most. And these days, I like to be between 11 and 18 delta on what I'm selling. Now, I'm ABS. I'm always be selling. in this market. And, I won't go more than an 18 delta, but I will take less than 11, especially in this market. Because, like I said, don't be greedy, don't be stupid, follow the rules.
Right.
And, I'd rather get my minimum these days. If I can get 25 cents in premium, I'm happy with that. Well, I'm okay with that. I wouldn't say I'm happy.
Yeah.
I'd like to have more, but with no volatility, with the VIX at 12 and 13, I don't expect to get 50, 60, 70 cents.
Right.
And if I do, that concerns me. I'm a skeptic. I'd rather step back, go a little further away, get less premium, because it's not the money you make, it's the money you keep.
Yep, absolutely. Awesome. Well, thanks. Thank you, Will, for the question. Thank you, Tim, for answering the question. You're in Sparks right now. I was going to say, I thought you were in
Yes.
Center. What's your next teaching schedule look like? Where are you going to be?
Minneapolis next week.
All right.
Well,
Well,
great place to go in January.
I feel really
And then-
bad for you. I'm kind of. It's really unfortunate. I love Minnesota. I love Minneapolis, but you're going to be surrounded by a bunch of very, very, very sad people starting next week. They play my 49ers this weekend, and it's going to be a whooping. Niners are going to destroy those. Oh, it'll be
I'm
interesting.
not
Saturday's
saying
going to be a
a
great
word.
game. I know.
I'll
I
just
know.
tell them I'm a baseball fan.
There you go. It'll be a great
That's it.
game either way. So I hope my
And
team
then-
wins, but who knows?
Then the week after that, I'll be down there with you in Irvine, and then we're Westwood. I just got added to Westwood this morning for the 27th, and then Woodland Hills on the 3rd.
Wow,
Then
nice.
Atlanta on February 24th, then back to Irvine March 3rd.
Holy cow, you're all over the place.
I love it.
Nice. Well, Tim, thanks so much for joining us. I'm glad you had a good New Year. I hope that 2020 is your best year ever. Thanks for coming on the show. I look forward to talking to you in a few weeks.
Well, I should be able to see it more clearly.
Sounds good, because you got 2020 vision.
2020, yes.
But all right, Tim, thank you so much.
Hey, Happy New Year, Merlin.
Hey. Guys, that was Tim Blotzer. Up in Nevada right now, in isolation in Sparks, Nevada. He moved, where was he before? I think he was down somewhere in California. Anyway, if you'd like to take an options class with Tim Blotzer, he'll be teaching in Minnesota, Irvine, Westwood, Los Angeles, Woodland Hills, Los Angeles, Atlanta, and Irvine, California. Those are all upcoming stops for Tim. I would encourage you to check that out. If you'd like to know more information about Online Trading Academy, how we might be able to help you understand how to use options in any environment, whether that's long-term, short-term, up, down, or sideways markets, click that link that's showing up in social media right now. If you simply type in your zip code, that'll tell you which center is closest to you. Again, there are 48 physical brick-and-mortar online trading academies around the world right now. We have free classes, paid classes, community events, and just a great dedicated team there trying to help you achieve your financial goals. So check it out. Of course, if you're listening to the podcast right now, you can go to powertradingradio.com. There's a free class button at the top of the page that will do the exact same thing for you. All right, let's look at our calendar for tomorrow. Friday, January 10th brings us a good amount of announcements for the U.S. We have average hourly earnings, non-farm employment change. We have our unemployment rate. Yes, we'll see if that ticks up a little. I don't think it will, but it wouldn't surprise me. We're so low as it stands right now. We have preliminary University of Michigan consumer sentiment for the British pound. They have the autumn forecast statement, Canada with employment change and their unemployment rate. Now, moving on over to your earnings calendar for Friday, not a lot going on. You have Infosys, Alphria, and ShiftPixie. ShiftPixie. I want to say that one 3 times fast. That's a tough one. ShiftPixie. Our guest for the show, of course, the ambassador of opportunity, John O'Donnell, will be our guest. We're going to talk about, I don't know, whatever we're going to talk about. All kinds of stuff happening out there. I will again scour through, look for some listener questions, see if I can answer what I did not get to answer on today's live show. So thank you guys so much for participating and keeping some lively discussions going on our social media channels. We love it. Thank you so much. We'll see you tomorrow. Take care.